So we'll have a short session here. We've already talked a lot about history, future, what all is there, what is going to come. We will spend a few minutes here to discuss about what exactly is happening at not really at 30,000 level, but we'll come down a bit below. And I'm sure you'll find it interesting. And after that, we'll have dinner. So right now, be hungry for information a bit for some more time, okay? Good. So I'll start with you, Ganesh. So I think only to understand how we calculate the kind of market potential that we have in Karnataka and what is the kind of reach we've already achieved. How exactly do we go about calculating the market potential? We've heard a lot of numbers being thrown about in the evening today. So how exactly do we reach those numbers?
Okay, thank you, Vinay. I think firstly I would also like to thank AKMI for this wonderful opportunity. It's just come out amazing. My first compliments to all of you for arranging such a great show. With respect to the question, Vinay, I think Karnataka per se is a very progressive market, right? So it's quite developed when you see any other state, especially on microfinance. We spoke in length about how it is very different in quality. In fact, for over 2 decades, we've been seeing the quality, not only in repayments, as well as discipline in the market is very, very high in Karnataka. From that per se, I think potential remains to be very high in Karnataka. Karnataka today, I think, is the 3rd in GDP rank and is supposed to surpass Tamil Nadu in the near future. So it looks quite promising, in the long term. And if you see, Karnataka has around 6.1 crore population. So we typically, for any state, we try and derive a potential by taking certain assumptions on households. So we take a 4-factor and we assume around 15 million households is something that is Karnataka's total households, out of which around 61% is rural, the rest is urban. So even that, you remove the BPL, which is currently not addressed by microfinance by a factor of around 10-12%. These are all basis government numbers. And you also remove the non-addressable market, which is the higher income bracket. So we estimate close to around 10 million households as a potential for the Karnataka state.
Out of a total of 15 million, you said 10 million is the potential market for us. Yes,
potential market for microfinance. So this is basis the assumptions I said, urban, rural. If you look at the penetration today, it's higher in urban. This is basis CRIF data. So around urban penetration is high compared to rural. So urban is around 70+%, and rural is only 40+%. So anywhere between 55 to 60% is the penetration that the Karnataka has achieved when it comes to microfinance. Another factor we need to also assume when we calculate potential, because many of this is depending on 2011 census. So we don't have a factor. We can assume a certain factor. One more thing we also need to assume is that India is going to remain a very young country till at least next 50 years. So there's going to be new and new borrowers which are going to come. So while I'm giving you indicative numbers, it looks a little more higher. So in the medium term, we believe, like Uday said, Karnataka has the potential to double and reach around 1 lakh crore in the medium term as we move forward. So that's broad math from my side.
Good. So those are big numbers. So Sadaf, let me ask you the next question. When you look at a market like Karnataka of this size, so one is of course the overall macro numbers which we just talked. But when you go down one step deeper, how actually do you analyze the various segments and how actually do you strategize around that? Which are the segments which you see are prevalent in Karnataka, which are generating a lot of economic activity, and where is the potential segment-wise do you see, and how do you plan for that?
Yeah, thanks, Vinay. I think first thing that we look at Karnataka from a point of view is that it's not a new market, it's a mature market. So the customers have been in microfinance sphere for some time. I think Samidhar did a great job in explaining how the microfinance business has evolved over the period of time here. And having an industry which is 50,000 crores almost, and a client base which is like a very, very large client base, 3 million plus client base. So I think we go from an approach that what is the kind of business that our client is engaged in. So Karnataka, I think over a period of time has kind of come up over certain crises like Kolar and like of other issues, demonetization and other issues, because of the diversity of the businesses that people are engaged in. Though largely the agriculture is the common thread which is there for our customers, the target segment that we are talking about. But even in agriculture, there are diversified fields. So a lot of them are in animal husbandry kind of a business. Milk is a big business here, and milk being a cash business, it helps kind of generate the revenue faster, and it's a pretty stable revenue. Then there are crops like cotton, there is rice cultivation, which is very high. So I think those kind of diversified business helped us to kind of reach out to the customer. So you look at from a geography point of view, if you go towards Bellary and other states, there are mining related businesses which are there. So there are customers who are engaged in that. If you come down a further, you go towards Hubli, that it's an education hub. So you have a lot of education related industry there. Then agriculture is everywhere, almost in the peripheral areas. Karnataka generally gets stereotyped in the IT hub kind of a name tag, and also now lately startup hub. But if you look at the rural sphere, there is a lot of entrepreneurship. So a lot of small businessmen, small business shops, kirana shops and all of that. So when we design our product, we look at the customer segment in that space, and we look at those kind of products. So I think Ganesh talked about the potential of the market. I think now the potential we look at from Karnataka point of view, we look at graduation of the customer. So customer has been transacting in microfinance for some time now. She needs credit plus facilities and higher credit. So which can be in the form of say a business loan, which is coupled like as a gold loan, or a kind of a collateralized larger ticket kind of a business loan, which could be looked at as a housing finance or a LAP kind of a product. So those are the things that we are innovating with, and that's how we look at Karnataka as a market. So when we are talking about 1 trillion rupees of portfolio that Ganesh is talking about, it's going to be mix of all. So the traditional JLG loan plus a hybrid loan, which is quite partly secured, partly unsecured, and something like a LAP which will come in. So that's how we look at it. The good part about Karnataka is like diversified sources of income. Milk business is a key one, small kirana shop is another one, and agri. So it helps us kind of give product and not be dependent on cycle of a one particular kind of a business which can affect the portfolio. So that's how we look at it.
Good, good. So from the numbers, we typically, Anand, get an impression that it's not really an emerging market in that sense. A lot of reach out has already happened from as far as the microfinance industry is concerned. And of course, we have the limit of 3 lakh family income, right? So an economy which is very rich also is purely from a very selfish perspective, not a very good thing for us, because we have this cap of 3 lakhs. So within this market, the way we've discussed the numbers, where do we see future potential in terms of growth? Are these some specific geographies, or are we talking of some specific industries, communities? How do we look at that, and how can one strategize around that?
Yeah, thanks, Vinay. Yeah, I think, my other panelists have mentioned, like, yeah, as you also told, it's a mature market. And as Ganesh said, we are the 3rd largest, in terms of GDP per capita. Also a large microfinance base. We said 55 lakh, unique borrowers at a minimum. So we are in I would say, as you said, a situation where our customers are going ahead of the 3 lakh income, and we have to find a way to keep them, otherwise they will be moving out. I think across Karnataka, if you see, penetrations, of course, in the south is more, but overall, I think it is not very uneven, except for maybe the hilly region. So the challenge for institutions like us is how do we meet our customers' requirement when the regulations say that there's only so much you can do. You can already see it in our numbers. Like a lot of our customers are moving beyond the 3 lakh income. Regulations is one, and I think the regulations can be solved. I mean, it's not that the regulator would not understand. I think we have to change. I think it's come up across the discussions that the reach has been met. Now it's really how do you segment the customers, borrowers, and really give them what they want. Like Sadaf also said, can you give a combination, not just unsecured loan. A lot of other panelists said, how do you give more innovative kind of loans? If we don't do it, I think the customers will move on and look at other, other financial institutions. Yeah, so that's where we are. Yeah.
Great, interesting problem to have, I must say. Harish, let me come to you now. So you've been observing the growth, and you've played your part in terms of how microfinance sector in the state has grown. So of course we give loans, we collect loans, and all that stuff is there. But what are the other things that you've seen, if I may, as somebody who's half outside, half inside? What are the other kind of things that you've seen, changes that have been brought about either at the community level or otherwise? What are the other kind of spillover effects, if I could call, that you've seen that the growth of microfinance in Karnataka has brought about?
Thank you. Good evening, all. So before touching that point, Vinay sir, I would like to touch upon the rich and diversified agrarian economy of Karnataka. Karnataka has close to 1 crore hectares of arable net sown land available here, with 36 to 37% as an irrigated land, which is one of the highest in the country. Here we can see the diversified crops, like when you go to Western Ghats, you can see areca nut, coffee, horticulture crops and spices, condiments. And when you come down, you have a very rich riverbeds like Krishna and Kaveri Basin, where you have sugarcane, paddy, and chilies. But I also like to mention about the Gulbarga area's contribution in pulses. But every sambar or dal, wherever it is prepared in India, the 50% contribution comes from the Gulbarga area. Having said that, let's not forget the milk sector. I think Sadaf already mentioned. The Karnataka is the second highest milk producing state in the country, with 1.6 crore liters being produced per day, and out of which 1.2 crore liters per day is a marketable thing. And you see the Karnataka Milk Federation collects almost like close to 1 crore liters a day collection capacity. This gives a huge number for us, basically how much we can reach. But definitely the microfinance advancement in the state is also linked to all these agrarian economy, especially if you see the milk production is a co-developed with microfinance, of course, because we always say in our banking days that these things can happen. But having said that, now today in Karnataka, see, whatever the 35,000 jobs we created as in total industry, as per AKMI records, now it is around 35,000 employees, means these guys are picked up from the college dropout or school dropout, and making them employable, training them and making them. And a lot of institutions also invest in their further education. We also do that, we give them the free holidays and pay their fee, college fee, so that they'll graduate and post-graduate and advance in their lives. I think a lot of institutions like CreditAccess, Grameen has their one in-house training program for 3 months for this kind of stuff. So I think these are all very, very important items. Even IDF does a lot of things, even I would say about other BC models. But overall, as a microfinance institutions across this state, I think we have done fantastic job in creating jobs. And most of them, I mean, today it may be 40,000 on-roll jobs available, but a lot of, even the double that number in last 10 years would have migrated to the other employable places for better jobs rather than working in the field. But as you said, the collaboration is, as you said, we work as a BC. In 2006, I was part of bank along with Ganesh and Uday, where I was part of a team with the district collector and RBI. The Gulbarga is the second district in the country after Ernakulam to complete the first level of financial inclusion, where we have opened 4.5 lakh bank accounts for the BPL families.
Okay.
The entire district was available at the administration, and we worked on that. But at that time, we don't know, as a BCs, we appointed, we opened the accounts, and after that, we don't know, because we don't have capacity, we don't have trained staff, and we don't have technology to do that. But today, as a BC, we have a lot of collaborations, because I think last week you also heard from RBI governor saying that the bank lending to NBFCs is reaching a level. Yeah. So obviously the collaborative models are going to be the key. Either you do BC model or a co-lending model or a fintech model, whatever you have. I think future, if you want to innovate on products, or if you want to graduate the customers into next level where you want to give higher loans or MSME loans or whatever it may be in over a period of time, I think the collaboration is going to be the key with the larger institutions.
Good, good. Thank you, Harish. So, along with the audience, I'm sure a lot of thoughts have come into our minds based on what each of you said. So I'll ask one question and then possibly open it up to the floor. So from the data that we've seen since the new regulations have come, we've seen that the loan sizes are becoming larger, and the repayment period is also kind of tending to become bigger. I'm sure it's a call which has been taken by the institutions. Are we also looking at going the other way, where we kind of give loans for very short periods of time, where a lot of fintechs are playing, at least for relationship customers? Two, is there a thought about, because we talked of dairy, because we talked of a lot of other industries which have some kind of a steady cash flow going, and I'm sure in the earlier panel also it was mentioned about data being captured by HDFC from dairy. So is there any thought around developing cash flow based products? So I would just open it up to each of you to just share as to what kind of innovations on that front we're thinking of.
Yeah, I think the product has to meet the requirement of the borrower. So definitely we have innovated over the period of time. We started off with a classic JLG product, but we realized a lot of our customers are into like cattle rearing business, poultry, cattle and other things. For them, initial loan of 10,000 or 15,000 would not work, because a cow or a buffalo does not come in 10, 15,000. So we started a new product, which was a dairy loan product, which was a slightly higher ticket size of a 50,000 rupees initially itself. Similarly, we realized that some of our customers are into a kirana business, where they require working capital. They don't require a term loan kind of a facility. They need a working capital which they can pay off very quickly. So we introduced a product called, for our company, Muthoot Small and Growing Businesses, which is kind of a collateralized, where a customer keeps her jewelry, and we give her a loan for that, and she repays her as she gets the repayment or the revenue from her sales. So I think similarly, I think we would have to innovate. We would have to meet the requirement of the borrower. Increasingly, see, the customer with the maturity of the market has become very aspirational. Earlier, which was considered as a consumption or a kind of a loan which was consumer durable loan, like financing of a mobile, was considered as a consumption loan or a kind of a non-productive loan. But now a smartphone has become a enabler for business. So it's a kind of a product which we need to finance to help our customer come to the kind of a digital foray and create more revenue. I think very interesting topic were getting discussed during the day. Somebody talked about how the digital penetration will go up, because the customer's revenue is largely cash, whereas we are talking about digital. So what we have done is to help the customer create a QR code in our business and help her kind of get digital revenue, so that if she has a cash flow or the revenue flow in the digital format, she can repay it. So similarly, I think the responsibility of the microfinance ecosystem is to provide digital literacy to our customer. So digital penetration can only happen if there is digital literacy. because not only how to receive money or pay money, but how to also be secure about it is important to mention. So products have to innovate according to the requirement of the borrower.
Interesting.
I think,
Yeah, Ganesh.
yeah. So I think for the question that you asked, Vinay, I think it's very early days from the change of regulation, and a lot of things are evolving. I think microfinance is moving more towards adequate financing, which was missing. For example, today you construct a home today, depending on the lender, they will give you enough money. You need to bring in probably 5%, 10%. But for example, in our company, the maximum exposure we have is towards the dairy sector. Right? And my average ticket size per borrower is less than 50,000 bucks. If you need to buy a good cattle today, you need to bring in 40 to 50% of equity. Right? So earlier there were restrictions of number of institutions, etc. Now probably the customer will borrow adequately from one or two institutions which they are comfortable with. So your competitive forces are going to kick in, how you treat your customer, what services you provide to your customer. I think all the discussions that we had through the day today here are in the right direction. A lot of things will change, a lot of things will evolve. But not even to the smallest fraction, I have the fear where we would overstep, because we have seen even in a state like Karnataka, where I have 25-year-old customers, they don't borrow beyond what they can repay, right? Unless they are externally influenced. So if you are connected with the customer, if you understand your customer better, I think they also play out their role very well. And the core concept of funding to women is she's a lot more aspirational, she's a lot more responsible, she spends towards productive use. So all of this, as long as we follow the principles of microfinance, spend enough time with the customer to understand their household and do your business properly, I think things cannot go wrong. And with in India being the only country where there is a bureau for microfinance, and SROs, not one, there are many states, central, etc. All of us working together. I think if there is anything that is going awry, I think all of us will work together to correct it.
Wonderful. Yeah, Harish, your views?
Yeah, Vinay, you asked the right question as per the cash flow mechanism analysis, because Samidha told about the advancement of microfinance. There was an SHG model, there was an JLG model. Now, everybody knows, a lot of the people are working on the ground. While giving the loan, it is a group loan. While collecting, it has become an individual loan already. So, no way we can ignore the cash flow analysis, because previously, if you see the RBI guidelines was 1.25 lakh was the limit. So obviously, everybody used to tick that. Today, there is a 3 lakh barricade, so everybody tick that. The ticking model will not work in future, because we will see the lot of issues on the ground unless until we build very robust cash flow mechanism analytics, because the 10, 15 years back when we are lending in innovation, in the rural, the MSMEs or traders, where we have a non-paper credit model we have evolved 10 years ago, or now there's a bigger need or larger need in MFI sector to understand and document the cash flow mechanism of the families. Otherwise, we can't sustain this growth.
Right. Anand,
Yeah, I think, see, we all want to do this, but we are not doing enough, I think, because the demand is there. I think because JLG model has been working well. Though I think one change that has definitely happened is, I think, the income, the capturing of the income, right?
Yeah.
Because RBI is mandated, we also see its value. So I think that is becoming sharper. With that, I think we'll start moving in that direction.
Wonderful.
Or competition comes and tells us you have to do this.
Yeah, that's a valid point. The more data we're collecting, more robust the data is, that will feed into product development. Yes, Sadaf.
Just one point. One point I wanted to add, I think Samidha did mention that 2030, whether we'll see an individual kind of a loan model, and where I think most of the microfinance industry abroad has moved to, except for Bangladesh probably. But I think that is what is, I think the new regulation is hinting towards. If you look at the regulation, there is no word as JLG.
Yeah.
So basically the hint is that you look at individual in based on an individual capacity. And now I think good thing that the industry has done is there is a good amount of data with the credit bureau. And you can assess an individual on our repayment behavior and repayment capacity. I think that is what is happening with FYR regulation. I think eventually it will move into an individual loan portfolio, but I think it's going to be for a while a slow transition, but eventually you would have to look at the customer in an individual way. The other aspect which you mentioned about the loan sizes going up, I think there is still a lot of potential. If I talk about our organization, we have done a very extensive check with the credit bureau data. So we have looked at the customers' average FOIR is around 27%. So there is still a lot of scope in terms of lending. And I would say, and I would echo what Ganesh has said, I think microfinance as an institution has gone through a mother of stress test, which is COVID. COVID 1 and COVID 2, and that is on the back of other issues that were there. So I think if the customer has been able to pay during that time, I think this customer is very, very creditworthy and they will continue to repay.
Yeah. Thank you, Sadaf. I open it up to the floor, to the audience to ask questions. Please be as specific as possible. Ask questions, avoid views because, we need to wrap up. Yeah, please go ahead.
Yeah. So just wanted to understand on the Oaken framework, wanted to understand from your 10,000 perspective, feet view perspective, what is the adoption looking like? Is it coming from the regulator? What is the technology adoption? And when we look at, if I would call MFI as an asset class, do we look at this same customer segment also being part of this framework? Because the way it is going, what it seems to be is that it is getting into an individual loan portfolio. So it is all going to be grouped under the same segment. And how does this Oaken framework work, just from your perspective?
So I'll answer that question. So Oaken, the issue there for us, for microfinance sector, is that we are constrained by the availability of a unique identifier in the microfinance bureau. Aadhaar we cannot capture. Voter ID is not really a very robust unique identifier. When you go to consumer bureau, PAN number backed by Aadhaar is a good unique identifier. Why I'm insisting on this is, talking about this is because Oaken is totally end-to-end automated. Okay, that's the platform. I don't need to get into the platform. I'm sure you know what Oaken is. So that is one issue that we have. For relationship customers, Oaken would be a wonderful platform for us because we don't really need to depend on the credit bureau records so much. We have the records with us. So there, I'm sure, and in terms of integration, it's quite easy. You just have to link up with the APIs and the thing works. So I'm aware of members who are looking at it. But to go whole hog like an HDFC bank or an ICICI bank is doing is a bit in the future. What we are hoping is that something like Udyam number, which is backed by Aadhaar, the more Udyam numbers we are able to issue to our borrowers, which we are doing, all of us are collaborating to do that. The more Udyam numbers we issue, the more we'll be able to onboard on such platforms which are totally automated.
Check.
Sorry.
Anybody would like to add to that, please?
Yeah, just a question.
Yeah, please go ahead.
By the light, so you might not be able to see me. Most of you talked about, or in some conversation or other, fintech being a competitor kept coming up, right? Is there thoughts of AKMI Tech coming up, with all of you coming together and forming a group and coming up with a common products or even a technology that every single MF company would adopt? Don't you think that would reduce the cost of operations or cost of?
I think fintech. While we all spoke about fintech, I think for the last mile delivery, distribution of money is very easy using fintech. But I think collection you need to have a backup, which is where the microfinance is playing as a big differentiator, right? So even if you saw during COVID, we were able to do better because you were able to connect to the customer when nothing else was working. So I think that last mile connectivity, the physical person, so a combination of tech and physical will be apparent for microfinance, in my view, for a long term. However, with common technology, I think a lot of senior panelists have spoken. Manjunath sir had spoken about collaboration, etc. I think it could be something that could come up in the future. I think as an industry, we would be open to it, but it depends on a lot of factors, right? So for example, today, even when we do a small securitization deal, the amount of data points that are different from every institution to institution, you go mad, right? So we acquired a company which was in the same business, but again, two softwares, how it is, different. It's quite complex. So it could come probably at a later time, but I think it's a right direction to think about it.
Ms. Rajesh SG, I have one question. Do you have any, regarding all financial institutions, microfinance institute, do you have any fast loan providing model, like with all security, with minimum security, and they also repay the amount very fastly? Do you have any kind of such kind of model in sense? We can provide a lot of customers, like we have more than 75 lakh students around India. So if you have such kind of provisions in sense, we can recommend you so many loan takers. Thank you.
Good, you can take it offline maybe and engage with them.
I really appreciate the people for being such a best. The fact is, microfinance is definitely organized sector, because compared to the unorganized, where judiciary deals the matter of the antisocial elements also being involved. I just appreciate for being such a good, for being a organized finance sector for all the needs. I just want to know, is microfinance is being dealt with both the agriculture as well as the non-agriculture? That's all. My name is Emperor Ganesh Naidu, Excellent Judge, Excellent Justice, and Excellent Chief Justice.
Yeah,
I really appreciate it. I really appreciate it.
Yeah, thank you. So we cater to all kind of people, agriculture, non-agriculture, everybody. Any other questions? Good. Thank you for being such a nice audience, and thank you to all the members here.